There's just so much bad news when it comes to these markets in China here right now. The outflow story, I mean, we've seen a lot of record net selling from foreign investors of late. What are you seeing from your perspective on where these flows are going now?
Thank you for having me, Yvonne. Good morning. Clearly, August, particularly post-July's meeting, investors waiting for a large-scale, massive stimulus they were hoping for post the meeting, but they didn't really get that large scale. They did get a various or several of mini policies of cutting rates, concrete measures encouraging people to remove the restriction for second home buying, etc., etc. That led some disappointments for investors who actually positioning in China prior to the meeting to redeem out from the position in August itself. You did see some outflows from China in August, but that still brought China year-to-date net positive inflow to A shares around $27 billion. That actually doubled the the dollar amount of the net inflow into China A shares last year, which is about $13.3 billion altogether. So altogether, investors are still holding their positions in China, just trading very much along with the headline news at the moment.
Yeah, to your point, we had a guest this week from HSBC who told us that the Chinese market is not a market that you invest in a conventional way, like you would the U.S. markets or India, where you leave your money for a long time and then you make money. It's a market that you trade and play. Would you agree with that assessment?
It depends on the time horizon you're looking at. If you ask me, I think it's quite the opposite. It's not a market that you should be timing and trade in and out. It is a strategic asset allocation call in clients' portfolio, more strategic than tactical. However, the last 18 and 24 months did create quite a lot of tactical opportunities investing in China. If you remember last year, the rally was so quick, so rapid, straight after the announcing of the reopening. The investor literally had experienced China as a very painful trade. As they didn't catch China, they were underweight China. They were trying to be tactical with allocating to China. That was a painful lessons learned by global investors. Obviously, if you look at every quarter, every here and there, you do feel the headline news does lead you to become more tactical to allocating to China. But if investors looking at long-term horizon, looking at how important economically China is to the whole world, how important as a strategic asset allocation China itself to global asset allocation portfolios, it does deserve a long-term strategic asset allocations.